Have you ever looked back at a stock like Nvidia, Amazon, or even Bitcoin itself and thought, why didn't I see it coming? Well, today, there's a company quietly setting up for what could be one of the biggest transformations in the tech and energy world, and almost nobody's paying attention. It's called Bitfarms, with the ticker symbol $BITF. And while most people still think of it as just another crypto miner, it's actually evolving into something far more powerful, a global-scale energy and infrastructure company at the heart of the AI and digital compute revolution. This might just be one of the most underrated stocks of 2025, and in this video, we're breaking down why. First off, Bitfarms started back in 2017 as one of the first publicly traded Bitcoin miners to run on 100% renewable hydroelectric power. But the story's changed. Today, BITF isn't just mining Bitcoin. It's building a scalable, low-cost digital infrastructure platform that could power not just crypto, but also AI workloads, cloud computing, and blockchain hosting. And here's the key. Bitfarms owns its own power generation, over 250 megawatts of installed capacity across multiple sites in Canada, the US, Paraguay, and Argentina, all powered by clean, renewable energy. That's a massive competitive advantage in a world where energy costs are skyrocketing. We're entering an era where computing power, not oil, drives global growth. AI models, blockchain transactions, and data analytics all depend on one thing: cheap, reliable energy. Most tech giants like Microsoft, Google, and Amazon are scrambling to find it. But Bitfarms already has it, and it's expanding. They recently announced over 400 megawatts of new development capacity in South America and the US, giving them some of the lowest energy costs in the entire industry, around 2 to 3 cents per kilowatt hour. That's insane efficiency, and it's the foundation for massive profitability when Bitcoin prices rise or when compute demand surges from AI players. Now here's where it gets really interesting. The same infrastructure Bitfarms uses for Bitcoin mining, dense, high-efficiency data centers powered by renewable energy, can also be repurposed for AI compute. They've already started exploring partnerships and hardware diversification beyond Bitcoin, preparing to allocate part of their operations for GPU-based compute instead of ASICs. This means Bitfarms could soon join the growing wave of miners turning into AI infrastructure providers, similar to what we saw with Iris Energy or Core Scientific. When you combine cheap power, existing data center real estate, and a proven ability to scale hardware, you've got a sleeping giant that's positioned perfectly for the next phase of the digital revolution. Bitfarms has over 7 exahash of operational hash power and is expanding toward 21 exahash by 2026. They've reduced corporate debt dramatically from over $140 million down to under $30 million, while increasing their Bitcoin holdings and operational efficiency. In their most recent earnings report, Bitfarms generated record revenue growth, improved gross margins, and achieved positive cash flow despite Bitcoin's volatility. That means they're not just surviving the bear market, they're building through it. At current valuations, BITF trades at a fraction of what competitors like Riot Platforms and Marathon Digital, MARA, are worth. Even though Bitfarms operates at lower cost per Bitcoin mined and owns a larger percentage of its infrastructure outright. That's why many analysts believe Bitfarms is one of the most undervalued crypto infrastructure plays in the market right now. As AI and blockchain computing converge, global demand for data center capacity could multiply 10 times over the next decade. The bottleneck won't be chips, it'll be power and infrastructure. Bitfarms is sitting on both. They've already proven they can scale fast, with sites that can go from design to operation in under a year. And because they build in regions with cheap, renewable energy and stable regulation, their margins stay strong even when crypto prices fluctuate. In a world running short on compute, companies like Bitfarms, with energy, land, and infrastructure in hand, could become some of the most strategic assets in the digital economy. Of course, no story is without its downside. First, Bitcoin dependency. While diversification is starting, most of Bitfarms' revenue still comes from Bitcoin. A prolonged crypto downturn could squeeze margins. Second, regulatory pressured governments around the world are tightening rules on mining and energy usage. Third, capital intensity. Expanding data centers and acquiring GPUs require massive investment. And finally, competition. Players like Core Scientific, IREN, and Hut8 are racing towards similar hybrid models. But here's the thing. Bitfarms has been through multiple crypto winters, debt restructures, and energy price shocks, and every time it's come out leaner and stronger. Bitfarms is quietly evolving from a Bitcoin miner into a next-generation clean energy and compute company with global infrastructure, cheap power, and real assets that most tech companies would wish. At today's valuation, it's one of the few small-cap plays with the potential to benefit directly from both the Bitcoin halving cycle and the AI infrastructure boom that's just getting started. If you believe the future runs on power and compute, then Bitfarms might just be one of the smartest, most overlooked bets on the market. So, what do you think? Is Bitfarms the next breakout story hiding in plain sight, or just another miner riding the wave? If you found this breakdown helpful, make sure to like, subscribe, and hit that notification bell for more deep dives into the future of investing.